Recording in progress.
Okay, so can you hear me now, Cicely? Okay, so are you able to hear me?
Yes.
Okay, good. Were you able to collect your liabilities or expenses for,
Yes. So I have a question about those. I can't see you though,
oh,
but that's okay. Um, all right, here we go. So in the process of collecting my when I was doing my inventory, 'cause my inventory, of course, is also a good majority of my assets as well. And a lot of those are short or current assets too, because a lot of those I can turn over in 24 hours. Not
mhm,
24 hours, but 12 months.
mhm.
But I was like, man, this is we have a lot. And in the process of gathering all of this information, it was taking a little longer than I anticipated. Gathering the numbers of things and because all the stuff I have packed up, some of the numbers I know by hand, which has also just showed me a blind spot. I need to be a little bit more organized in that area because it's put up nicely, but I don't know what I have and what I don't have and how
Mhm.
many because I know the quantities and things like that. Those numbers are important.
Mhm.
So I have started. I'm not completely finished with that list, but I am in the process of making sure all of that is gathered.
So my question to you, because I know you have another question, so let me ask this question. In
Mhm.
your preparing your assets, are you preparing a list of the assets or the value of the assets?
Next question. So I have the list. How do I don't even know how do I assess the value of it though?
Okay, so
Because I know
you,
what I have.
mhm. Did you pay for them?
Yes.
Okay, so you paid for them recently or a while ago or
Some of them were a while ago, some of them was recently.
okay, so for the ones that you paid for a while ago, you would take the price because I'm sure they don't cost the same price now.
No. Mm-mm.
Okay, so you're going to add a certain amount of appreciation to them, right?
Okay.
Not to the ones you already have, but what you're going to do is you'll take the what I mean by that is you're going to take the value of the ones, let's say you bought a year ago, and let's say cumulatively you spent $1,200 on those assets that you have from last year, and now they cost 2,000 plus, right? So when you're calculating the value, you're going to and let's break it down into units. Let's say it's each item is $50 each. At least that's what you paid for it then. But now each item is $100 each. So you're going to take the cumulative value of all of the assets, all of the inventory that you have, and put a value on that. Does that make sense?
Mm-hmm.
Per unit, take the whole of that inventory, put a value to it per unit, and then calculate it. So if you've got, let's say, 100 pieces, a
So
hundred.
like we can do one for the tablecloths. The tablecloths were I got 35 tablecloths, champagne velvet tablecloths for $872, I believe is what I paid for it.
How long ago?
Um that was last year in January, actually. It's actually been a whole
How
year.
much would it cost you to buy it now?
Oh, I can actually look that up.
So we won't go through depreciation today. We were going to go through depreciation as
Right.
well, but we'll do that on another day. But
Because
let's.
I figured that as well.
Mhm,
Like the same thing with while I looked this up, the same thing with my like our balloon blowers.
mhm.
Um we just got another one recently.
That's
And
awesome. Adding inventory. That's excellent.
right. And I really like this one. It does a lot of cool things. Um
That was not my intention.
it's okay. Okay, so they're 25.90
each. Mhm. Oh, something. Oh, you lost your connection.
Yeah.
Mhm.
Okay, so they were 872 before. Now they are 25.98 a piece. So it brings it to 909 now.
You see,
That
so
is
you
that
see how
included
the,
in
huh?
I just missed it. What we're doing now?
No, 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 no. It's not. It's not in
Okay.
there. Uh-uh. Well, it kind of is, but no, not the
I
way we're
missed it.
breaking it down now. Not the way we're
Okay.
breaking it down now. Mm-hmm.
Okay.
So, um, you were saying they cost a little bit more now, so approximately somewhere around $100 more. I'm rounding up.
Mm-hmm.
Okay. All right. So what you're going to do then is that's the value that you would place on it, whatever the current value is, because we're going to go through a depreciation, accumulated depreciation, which you can find in this book on page 115 in this book. Um, that one. Homeownership pre-planning is on page 15, and I'm about to see where it is in the Easy Corporate Comprehensive Curriculum. But let's just pull all of the assets together, and then we'll walk through the depreciation process the next time we get together. Because at that point, we'll have a total amount.
And you said 15 or one? Oh, okay. It's on 14. Wait. 15.
115 is the depreciation. We're gonna next time we get together, we're gonna walk through the accumulated depreciation of the assets that we're now
Okay.
uh, compiling. And what we're talking about now are tangible assets.
Mm-hmm.
That's your inventory. Okay, so that's just the tablecloths and such, right?
Yeah.
But then you've got a lot of inventory. So let me show
Yeah,
you.
we do.
I'm going to share my. That's a good thing. That's a good
No,
thing.
it is because then like I have so many questions.
Go ahead, fire
So
away.
so you answered that one. We're working on that one. So I have
Well, do
things that
you
I
really have that answer that you're going
no no,
to?
let me write that down before I move on.
Mm-hmm.
So you said we take you said take what it is now.
Uh-huh.
The 909, the value
Yes.
for it now.
Uh-huh. Yeah. And another way you can do it is you can place a value on every piece that you have and count that as a unit. And then get the summation of all of the units of inventory that you have, add that together, get the sum of that, and then that will give you your total inventory. Does that make sense?
Okay.
You could price it per unit, then add it all together, all of it.
Okay.
Yeah, and the way that you want to price it per unit is you're going to base it on whatever today's prices are, because we're going to go back through and calculate the accumulated depreciation. So you're safe in calculating it at whatever today's value is for that product. Does that help at all?
No, yes, I'm writing it down. Okay.
Yeah, that's going to give you your value, but you want to base it on today's value, because while we're going to calculate the depreciation, there's also some appreciation there's appreciation in the value of that product, because you can't get it at that price any longer, you
Mm-hmm.
know. So while
Yes.
we do have to calculate depreciation, the way inflation moves now these days, you also have to consider there's an appreciation in the value of that product. It doesn't You can't get it at that price anymore. So the value is worth more than what it was at the time that you purchased it. Also, if you ever purchased anything on sale and you add it to your inventory, always give it the value based on the market value. of that product, not what they sold it to you for, because they may have sold it to you at a discount. You're going to use the market value to calculate the value of that asset.
Purchase anything on sale, always
You may have gotten it free.
use
Calculate the market value of whatever the asset is.
the market value of the asset, even if it was free. Okay.
All right, so we're
Next
going
question
to,
is,
yes, sorry, honey, because I'm
no,
glad.
you're fine. So next question is, so there are things that Kirsten has purchased with her funds and then things that we purchased together, of course, for the company. So in determining um our current assets, I know I take the things that we purchased together, so I need to do inventory of what she has as well.
Yeah, it's
I
it's
figured,
it's an asset of the company.
right. That's a lot. That's a lot. Okay.
Yeah. Now, when you get ready, when we get to figuring up the stockholders' equity, then that's when you break out the items that you purchased and paid for. That's going to be accredited towards your stockholders' equity because that's your capital contribution. Likewise, things that she's purchased, that will be a part of her stockholders' equity because that's her capital contribution. Does that make sense?
Yeah,
Okay,
yeah,
that's when
yeah,
we get to that
yeah.
point.
Okay. Okay. It's gonna take a little longer than I thought, Mom. Um,
I I when we and I started to make sure, but we only have a certain amount of time.
no, I
I knew
understand.
when I knew when I gave you the assignment that your company was going to take a little longer than a lot of the companies. A lot of the people have intellectual assets too, and we're going to talk about the intellectual property because they and non-tangible, you know, intangible uh product that they have, such as orders, orders that have been sent that they haven't completed yet, all of that kind of stuff. Okay, so now do you have any letters of intent or individuals who have stated that they're going to, you've got business working in that's coming up. It hasn't started yet, right? But you know that it's coming. It's an event that's coming in February on the 14th. This organization always gives you, I'm just using an example, always gives you their business for this particular, so you already know that that contract is yours. That's an asset too.
Okay. We have stuff coming. We have things coming up in May. We have events coming up in May. That,
Well, because we're doing your first quarter.
right. I just want to make sure I don't understand. Like, so
Hmm.
we have people on the counter. Like, we haven't set the deposit amount. We haven't ironed
Now,
out what we're doing.
once you collect the deposit, that is now a current asset.
Right, right. So we haven't
Right.
got that far in the process yet. So I'm right with the
Okay.
question I'm asking. Yeah, well, I'm right with
Okay.
the understanding I'm having.
Right.
Okay.
Right. So if
Hmm.
you had collected the deposit, you could count it in this quarters. But since you haven't collected the deposit, you don't want to count it in this quarter. You can still, if we were doing if we were just collecting all of your assets just to set up your asset base for your financial statement. And I guess it depends on what perspective we're trying to project in the financial statement. For now, we're not going to use it, but it depends on what you want to project. Let's say you're going to be going before the investors that's been set up by the uh, boutique brokerage. They've got you some investors. They've already laid out what it is that your company does, right? And they've given a general idea of the value of your company and your production and what your projected value is going to be, right? When you go before them with your financial statement, you would include all of those letters of intent, all of those intentional contracts, those events that you do consistently every year. You would include those because you
Hmm.
need to give them a full snapshot of what you do and what you're capable of doing and what you got coming down the pipeline.
Hmm.
Make
Hmm.
sense? But if you're
Hmm.
going to apply for a loan, they want to know what you have specifically. Because if you give them some projections and you haven't collected the deposit, to them it really doesn't exist, because unless the people have already entered a written now if they hindered a written contract, whether you have a deposit or not, they have contracted with you to do that event with them every year, which brings me to my next statement. If you have people that do business with you every year for a specific events, go ahead and get them on paper.
Okay.
Get them on paper for future events. Before you can finish doing this event, make sure it's understood that we're going to do next year's event, but have them to go ahead and enter a written agreement so that you can allot that time for them, commit that time for them, so that you all aren't doing engaged in something else. That's what you're going to say. But what you're doing is you're getting them on paper so that you have that as a true letter of intent. Because if they haven't paid a deposit, but you got them on the contract, they signed it, you're good.
Mm-hmm.
You don't have to hold them to it, but that's still a part of your inventory. That's a part of your asset. Make sense?
Yes.
Okay, I know that was a lot. So, this particular go ahead.
Sorry. My
Yeah, come
question.
on.
So here's the one that's a little harder for me to figure this one out. Because we have a whole bunch of balloons, like individual. We have like I have a whole bag I have to go through. Like they're all like they're just
That's value though.
like we gotta go through and separate. It's a big bag too of just some events we did, and they don't have a set
Mm-hmm.
place. I gotta go through those. But we also have a lot of balloons. Um,
So what's the average price per balloon?
okay, because we normally do them at the depends on the site, depends on because we go through there's 4 different sites that we work with, and they have different prices for different things, different colors.
You gonna average it?
But I see what you're saying.
You're gonna take the average price of a balloon that you would use for your events,
Mm-hmm.
right?
Mm-hmm.
And let's say, I don't know, you got 10,000 balloons, 20,000 balloons. You're going to just multiply that average price by the estimated amount of balloons that you think you have, and that's the value that you're going to add. Make sense?
Mm-hmm.
Yeah, just average it out. Because on your financial statement, you're given a snapshot of your financial position. So clearly, you have quite a few assets. That's really what you're trying to project. You've got
Mm-hmm.
quite a few assets. That's value.
Mm-hmm.
Matter of fact, it can be extremely valuable. So yeah, you don't have to get the exact price of the balloons, because
And it
like
would
you
be
said, you go
current
to four
because we
different
can turn
sites.
those over. Mm-hmm.
You go to 4 different sites. So there's no way to pinpoint the exact amount, but you can get an average amount per balloon, and then multiply that by the number of balloons that you think you may have. You're not going to go through there and count 10,000 balloons. One, two, three, but you but you're going to
That's
estimate.
what I was like, oh my. I got so overwhelmed. I was like, Lord. Oh.
Inventory can do that to you, girl. Mm. Does that help though in you
Yes,
calculating? Okay.
yes, it did.
So I wanted to ask you, I'm about to get in a position where I won't be able to see you. So if you need to catch my attention instead of gesturing, I'm gonna need you to say something, because
Okay,
I won't be able to see you. But
okay,
I wanted to say to you that this particular video is going to it's going to be made public to
okay,
teach, because this is valuable information that people need. And so I'm going to say this for the sake of the recording. I am not licensed to do anything financial, and that is not the intention of this teaching. The intention of this teaching is to teach a business owner, a entrepreneur, a corporation, how to, specifically the financial officers, how to determine their financial status so that they could pass that information on to their accountants. And what better way to do it than to understand how to prepare a financial statement so they can prepare a draft to give to their accountants, who would then audit it. So that's the purpose of this teaching. I don't have a license or any type of credentials that would give me any type of authority to teach finances. I'm simply showing a corporate business owner how to set up everything that they need to prepare their financial statements for the purpose of passing it on to a licensed practitioner that could then apply all of the necessities to a financial statement. So I just wanted to say that for the record because this is going to be recorded. So let me just run through this real quick, Cicely. Wait, do you have more questions before I go through what I'm about to go through?
No,
I
no.
got time. This is your, firstly, is your class. Secondly, it's your dollar. And thirdly, it's your company's future. So this is your time.
I
Unless you,
can't think.
unless all of a sudden I said because it's going to be made public, you don't want to talk
No, no,
anymore.
no, 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 no.
Oh, and congratulations
Um,
on receiving your certificate of completion.
excited.
I am too.
For the credit bank balance. No, that was it at the moment. You helped me out a lot with that. And you said that equation, the first question I asked about the tablecloth, you said that was in the book, but you broke it down a little differently. What what page is it? Is it what page is that equation in this book?
You mean about pricing it per unit?
Uh-huh.
It's not going to be in there. It just tells you to collect all of your assets, collect a
Okay.
value of all of your assets, but it's not going to tell you how to
How to collect the
let
value
me
of all
just
the
make
assets.
sure because I was trying to go step by step, so it may be in here because I got a lot of stuff where I just
As
went
I said, I
step by
think I
step.
missed that.
Current assets, accounts receivables, inventory. No, it doesn't tell you how to place a value on your inventory. Well, I would need to add that in the second edition. Yeah, so because it just says the formula sums up the value of the cash, the accounts receivables, and the inventory and gives a total figure. Yeah, it doesn't show you how to add value to your inventory. It just shows you after you accumulate all of the figures regarding your assets, how to calculate them. It is so, yeah, right. So it says if you got $30,000 worth of goods. Yeah. Okay. Make a note of that. I think that's something I want to add in the second edition. See, y'all keep
Okay.
giving me stuff to add, and then be asking me, is it finished yet? I'm constantly adding things, but that's a good point, though. Yeah, I'm gonna be real honest with you. I did not think that it was necessary to help people understand how to calculate a value for their inventory. But now that you and I are talking, it's like, yeah, when they've got that much inventory, they need to understand how to place a value on it. So when you see it in the book, you know that came from you.
Okay.
You inspired that.
Okay.
Yeah, I'm gonna add that today.
Okay.
Thank you for that. Okay. Whew, that I'm excited and at the same time I'm like, ooh, I missed that.
Mhm.
So I'm gonna quickly go through this. This is for the
Okay.
sake of the recording.
Okay.
So your numbers tell a story.
Mhm.
And what we want to do is we want to make sure that your story tells the story of success, the success of your company, because clearly your company is very successful. Y'all are constantly hosting events, designing events. You're powerful, but not just you, but a lot of the companies that I work with, you guys are very successful. But we want to make sure that your financial story, your numbers, tell the story of your success. So most new business owners, and when I say new business owners, we could be talking anywhere from 1 month, 1 day to 10 years. To
Mhm.
15 years because you're constantly growing, you're constantly progressing, technology is constantly being enhanced, and you're always hopefully adding new software that will help build your company. So when I'm talking new business, I'm talking from anywhere from the first day to 15 years. Some people have been in business for maybe 10 years and then they incorporate. They may have been a different type of format. So when I refer to new businesses, that's what I'm talking about. But anyway, there's a fear of financial statements when it comes to a lot of business owners. They think it's too complicated. And what I want to do is show that a layman, unlicensed, uncredentialed individual like me and like you can learn how to prepare your financial statement. So you want to discover your balance sheet, your income statement, your cash flow statement. These are some things that you want to be able to speak about in terms of your business. It says a lot about your business. Matter of fact, it talks to you about your business. It's going to reveal to you whether or not your business is healthy, profitable, ready for funding. If there's some things hiding, value hiding, deficits hiding that you hadn't considered. So when we look at chapter 12, in the Easy Corporate Comprehensive Curriculum for New Business Owners, then what we find is a in-depth way of determining your financial status. What we learn about is preparing the three core financial statements. It's actually four key components, but we're going to talk about the three core components that every lender, investor, or serious business owner relies on. That's your income statement, as we talked about. That's going to show whether your business is making money. The balance sheet shows what you owe, who you owe, and it shows your true net worth. Also, your cash flow statement. And let me correct that on the balance statement. I said two things. I said the same thing twice. It actually shows what you own and what you owe. And that's going to give you your true net worth. The cash flow statement shows how money moves in and out of your business, your operations. So what you're discovering is how to organize your financial data, categorize your transactions, calculate key totals, present your numbers in a way that's clean, not just for your sake, but for others that may be looking. So this isn't accounting, because I'm not in a position to teach you accounting, but it's giving you corporate power, corporate authority, because when you understand your financial status, you walk in authority. You then understand from your financial status, wait a minute, I got a whole market share that's due to me. Now, show me. If you are a faith person, it will be Holy Spirit, show me how I can access my market share. I now know how to calculate my market share. So it just gives you authority in so many different ways to be able to do that. If you're not a biblical person, but you are a person who understands that you can put things to thought and then frame an entire trajectory and strategy, then you understand that this corporate authority, this corporate power that you get when you know how to prepare your own financial statements, and you can look at them and know where you are, gives you a foundation that's a solid stance. So when you master the things that are being taught in chapter 12 of this book, you'll be able to understand your business at a glance financially. You'll be able to make smarter decisions because you'll know where you are financially. Like you just said, there were some things that were hiding. You now know. Yeah. Yeah. It'll help you prepare for funding if you ever need it, whether it's through selling of stock. I prefer that. That's my favorite because you don't have to pay that back. You just have to make sure that you're providing them with dividend payments, depending on the type of stock structure that you have. All right. It's going to help build investor confidence if they decide to subscribe and agree to purchase some of your stock. It strengthens your core structure for your corporation. So this chapter 12, it transforms you from just being a business owner to being a corporate leader. And that's what I want. I want that in your language. I want that in your walk, your talk, your financials, everything that you portray, everything that's true. I want it to be seen in the way that you operate. So this is your invitation to step into your CEO role. I know you're the CEO of your corporation, but I want you to start understanding how to prepare your financial statements today, because the minute you start, like, I know you got to feel differently now than you did at the beginning of our class.
Oh, most definitely.
Yeah. Yeah. It gives you a feeling of confidence, like electrical confidence. Like, okay, I know it may look bad today, but it's not, because we're looking at this overall picture of our inventory. If you didn't have not one customer, look at the inventory. That's assets.
And that's what, when didn't mean to cut you off, but that's what really had me thinking. I was like, we have a lot. And I didn't like, because what you could see was in front of you, object dominance. But then, like, when I started listing all the things that we have, even stuff I forgot that we have, I was like, oh, that's right, we do have this. I haven't used it in a while. We have it. It's still part of our inventory, it's still an asset. Yes, absolutely. It definitely
See?
changes my perspective.
Oh, come on. Okay. See, that's what I want. That's what I want for every single person. Um, People say, why are you so passionate about this? Because what did this song, what did the person in the Bible say? I've been young and now I'm old. Huh. We started this when we were very, very, very young adults. Matter of fact, we started this before we had any children.
Hmm.
And every step of the way, I can say that we've never failed. And the reason why I can say that is because even when we were at our lowest, we still had our assets. Even when we were at our lowest, a simple preparation of the financial statement and a meeting with the banker changed everything. Or a meeting with a boutique brokerage that introduced us to some, and this was, this time because you was with us. It was back in 2019 when our client, we went from having pages and pages of orders to none, right?
Hmm. Hmm.
Well, right after that, in between that place and the place where we are now, I had an opportunity to go before some investors. And that's how I was able to keep moving forward. I didn't set that meeting up myself. I didn't know to do that. You understand what I'm saying? But I
Hmm.
met with some really nice brokers who were very, very small. That's why they call boutique, very, very small, but they understood title abstracting and what it meant to the title insurance industry. So they were able to put us in front of some investors that said, oh, yeah, come on, we will do this amount. And I was like, I don't want you to do that amount because I don't want you to have that big of a stake in my company. But if you just do
Hmm.
this amount, I don't mind you owning that amount of interest in my company. They went for it. They signed up
Right.
subscriber agreement and bam, we were back in business again, if that makes sense. So, and when I use that term back in business, I don't mean that we ever stopped being in business. I meant that we
Hmm.
had the resources we need to rebuild and to overcome some of the loss that took place, right?
Hmm.
So that's why I get excited with people. I remember the time when we were younger and we made several millions of dollars in one of the years that we operated. That was exciting to us. It made national news, it made local news. It was a big deal for us. We were young and we thought that's how it was going to always be. That's not how it always was. Not it wasn't like that every year, but it was a blessing to feel that at that time and to know what to do with
Hmm.
those funds to help us span over decades of time. All of this stuff I want to share with other people and see them get excited. So as you've already opened your book to chapter 12, if you haven't, go
Hmm.
ahead and do that. We're going to follow step by step some of the breakdowns in preparing the balance sheet. So I want to make sure that in this chapter that we're completing every exercise, that we're helping you to build your I call it a sample financial statement, in that it's going to be a draft that you would use to present to your actual accountants. But that draft will tell you everything that's going on with your company, so someone can't come along and then try to manipulate things in your company that you don't know anything about. That's what happens with a lot of people when they just turn it over to the accountant. Then well, I won't say what can happen sometimes when they're dealing with accountants, but I'm sure you've read the news. You can see.
Hmm.
I mean, you've seen the news. So what we're going to do is we're going to keep practicing this until it becomes like ingrained in your cerebellum. It's going to become second nature to you, so that your future lenders, partners, investors, they're going to thank you because your stuff is going to be always put together properly and your business is going to be able to run smoothly because in the back of your mind, you always know the financial status of your business. It makes a difference in how you run everything. You'll be able to operate with clarity, confidence, and growth. It's going to present corporate excellence when people are doing business with you. All right. So if you're ready, I'm gonna click you over and start sharing this page with you so we can start building your financial statements. And this is what your business deserves. It's what you deserve. As Enchanting Designs and any other company that may be involved in our courses. So let me pull this up and share it with you. And I thank you for allowing me to do that little presentation for the sake of the video. I'm grateful to you for that. Now I can chop that up and use that. All right, can you see the screen?
It's loading. Yes.
Okay, so if you look over, so is that image over to the side?
Yes, it is.
Okay, but can you see it?
I'm pulling, bringing it up now. Hold on. Yes.
Okay. What we're doing right now is putting together your inventory, the value of your inventory. Up top, your the amount of cash that you have in your checking account, the amount of cash that you have in your savings account, that's what's going to go here. Any cash that you have on hand, that's going to go in this area here, total
Mm-hmm.
cash. Okay, now this financial statement that I'm working with, you can pull this up in your Google Docs under Sheets. If you go to Sheets in your Google Docs, I appreciate you again for letting me do that presentation because I'm going to use it. So it's difficult to explain to people all of the benefits of the course that we teach because I know they don't. So they're accustomed to sensationalism, right? Somebody comes on, they've got this lavish background of 18-room house, 75,000 square feet, with 1,700 acres of land and a staff of 9 butlers and 10 maids
Mm-hmm.
and 2 Rolls Royces and a Lamborghini. And so they're accustomed to being sensationalized.
Mm-hmm.
But the part that blows me away is if you study the lives of those who we know are meganaires, mega billionaires and trillionaires, just study their lives. They go up and down. They don't stay the same. If you just study their stock, it does not remain the same. It doesn't fly high all the time. This teaches you how to maintain no matter whether it's high or low, what to do if you plummet, how to go back up. You know what I mean?
Mm-hmm.
That doesn't happen in sensationalism. So when I'm trying to show people the value of the course, a lot of people see it and are excited about it. But then there are some people and you're looking at them and you want to help them, you know, but I've learned not to share unsolicited advice. Make sense?
Mm-hmm.
So the reason why I'm walking through this in a manner where it can be seen by others is so that they can understand the value of what they'll be getting and how it's going to help them. Make sense?
Yes, ma'am.
Um, so if you got that sheets open in your Google Docs, search for financial statements. I think somebody that I have just admired so much over the years is Warren Buffett. He um he the way that he made a lot of his profit is he would buy companies and merge them, or he would buy companies and build them, sometimes sell them, sometimes keep them in profitability because he had a passion for corporations and companies as well. You got it?
No. Would it be
Okay.
annual budget tracker? I don't have one that says financial
Mm-mm,
statement.
mm-mm. So,
Mm.
so really, um, you're, I know that's what you're doing. You're searching in the templates.
Mm-hmm.
Try balance sheet. Did you do financial statements, plural?
Yes.
Should have come up. Try balance sheet. Nothing. Still not coming.
Yeah. It's a little different than yours, but yes.
Did it come up?
Yes. What is this?
Does it look similar?
No, I don't think that's
No?
it.
Okay. Okay. We don't we don't want to do that there. All right.
Can you share that one with me and I can make a copy?
I'm hoping that I can then actually share it as a link and then you can open it up and work in it. Because
Okay.
I think we did we do that on the budget? We might have done it on the budget. And then it just open up in your Google Docs. I think we might have done that initially on the budget.
Yeah.
It's possible, I think. Okay, so then I'll do that. But for now, I just want you to see that the see here, these spots, they calculate themselves. They'll populate themselves.
Mm-hmm.
They'll calculate for you. And you look at the top, you see it's already got this the formula up there
Mm-hmm.
at the top. So that part you don't have to be concerned about. And then once you get everything filled in, it's going to prepare a summary for you. You can complete a profit and loss, all types of transactions you'll be able to conduct. So here, um, accounts receivables. So whatever your accounts receivables are, you want to put that in there. Now, some people say that you should use the net of your accounts receivables, but for now, for any outstanding receivables that you have that haven't paid yet, or for the receivables that you've collected in this quarter, we want that amount to go there. That's
Okay.
going to be your production. That'll be for all of your production in this quarter, or um, production for events that haven't paid yet, but you still want to put that sum in there. And then, of course, that dreaded inventory value, that's going to go there. Anybody that's paid you a deposit, we talked about that.
Mm-hmm.
Any deposits, any prepayments, they're going to go there as current assets. Now, some people would say you would just put the amount of the deposit there. And some people teach that for the entire event that you have them under contract for, that they've prepaid their deposit for, whatever the sum total is for that event, you put that amount there under prepayment.
Okay.
All right. When we look at the property, see here, we're down here. Can you
Mm-hmm.
see it real good? Okay, so
Mm-hmm.
any vehicles that you have placed under the company's assets, you want to go there.
And I know we talked about that last time because I haven't done it yet, but I guess an intent to do so.
Mm-hmm.
Okay.
Yes.
Writing the intent to do
Excuse
so.
me. Sorry
Mm-hmm.
about that.
You're
Why is
fine.
this happening? Drink some water.
Okay.
Okay. Hmm. Any furnishings or fixtures that you may have. So that so you would probably count that as inventory.
Yeah.
Mhm. If you were in a location where you had, all type of equipment that you use, like, desk and all of that type of stuff, then you can count that, furniture.
So that's when we open up, when we do get that on-site location,
Hmm.
then that'll be all the fixtures and things that are inside there that the
Hmm.
booths and stuff will hang out. Okay.
Yes, yes.
Hmm.
Okay. Equipment, copiers. Why is that the only equipment I can think of right now? But anyway,
Well, equipment, would our balloon blowers be
yes,
that's
yes, that's
equipment
not
in inventory
inventory.
for us.
Yeah,
Okay,
that's
that's
not
not
inventory. That's
inventory.
equipment. Mhm.
Okay.
And then soon and very soon, the building.
Yes, I'm excited. That.
Yes, the building. And of course, the land.
Hmm.
You just keep adding and adding and adding. All right. And then that's going to be your total property. Um, Property, plant, and equipment. That'll go here. And it'll automatically, again, when you start filling that in, it's going to automatically populate for you. Any other assets that maybe aren't listed here that may be unique to your company, you want to list those there as well. Mhm. So let's say you had, so the book is going to, let me see if I can pull that curriculum up on the screen so I won't have to keep looking down at the book. Mm, I'm looking for a specific area where it talks about tangible and intangible assets. Give me a moment. So it's probably in the book we started with. And go to. I love that book. That little one.
Mm-hmm.
Yeah, that's my favorite. I really like. Not to say I don't love you too, Easy Corporate, but I love this book. Okay, let's see. Mhm. Yeah, let me see if I can put it into words here. So when we're talking about non-physical assets, intangible assets, like what I mentioned earlier, you might have patents, trademarks, copyrights. Um, but we won't talk about goodwill right now. Goodwill is when you purchase a company and you pay a certain amount for it, and there's a difference between what you pay for it and the value in the company, and the difference between the two would be the goodwill. It's non-tangible, but it's also an asset. We've talked about it in the past, but we'll talk about that a little bit more in the future as you guys begin to start matriculating amongst one another and buying each other's companies and doing stuff like that. But right now, we're talking about patents, trademarks, copyrights, and those type things. Assets that are yours, but they're not tangible. They're intangible assets, but they have a value, non-physical assets. So I want to make sure that you understand these components as well, because they're significant. Yeah. Some people count them as non-current assets, especially if you're talking about goodwill. But see, something like a copyright or a trademark or a patent, that's something that you could sell within your business cycle.
Okay.
All
I know a
right.
long time ago, I don't know if it's related. I know when I was going back through getting Journey to Self together, I remember we trademarked that.
Mm-hmm.
I have not done that with Enchanting Design.
Really? You
That
should.
logo, yeah.
Yeah, you should. You should.
Yeah.
Because that becomes a part of a non-tangible asset. It has
Right.
value to it. Yeah. All right. So, and if you purchase, if you have owned any kind of stock, that's considered a long-term investment. So it's going to be a non-current asset, but still, if you own any type of stock at all, any kind of bonds that you've invested in, any other securities, a mutual fund, any of that, those are considered long-term assets. So I wanted to mention those to you as well, long-term investments. And again, I'm finding this on page 114 in this book, Homeownership Pre-Planning and much, much more. Yay! Okay. Now, if you go with me down to the bottom of this document, right here where we're talking about liabilities. So we dare not talk about liabilities today because you got a lot to deal with those with those assets. But I just wanted to give you a sneak peek, not trying
Mhm.
to overwhelm you, but right here is where we'll be talking about. And I don't want to say that we'll do it next week because I don't know how long it's going to take you to get all that inventory together. And thank God for it. And just think it's going
Right.
to be bigger and bigger and bigger. What?
Yeah. I'm excited.
Look at God. You didn't even realize you were there, did you?
No, it didn't.
Yeah, that's deep. That's
Hmm.
real deep. Wait until you still start actually calculating your earnings per quarter. You can be like, what? I know we made that. Mhm. But looking at your current liabilities, that's going to be anything that you've got in terms of accounts payables or note payables and any other kind of current liabilities that you may have. Um, Credit account or something that you open with a particular store, a net 30 account or something
Hmm.
like that, that would be
Hmm.
considered a current liability as well. And that would go under other. A deal that you may have made with somebody to purchase some of their equipment and you're paying them directly, individually. That will be under other current liabilities, or it could be placed there. Then you see the non-current liabilities, and of course you understand how that works.
Mm-hmm.
Long-term payables, all of that's there. So if you include a vehicle and there is a liability that comes with the vehicle, a payment that's still due on the vehicle, you may want to include that in there, or the balance. That may be something that we would have to discuss off camera so we could see how best to do it. But
Mm-hmm.
typically, if you include a vehicle that you have now made an asset of the company, and that vehicle has a liability, a monthly payment, or maybe a long-term note payable, that's going to go right here.
Okay.
Mm-hmm. Yeah. Okay. That gives you an idea of this. And then again, any stock that you may have. And we're talking about your owner's equity. So now we're talking about any contribution. Yeah, any capital contribution that you may have. You want to put that there. Any retained earnings, that's any earnings in your account from last year that you did not, you didn't issue dividends. You guys didn't take those dividends. You allowed them to stay in the account so that you could use them for operating and growth. That's a retained earning. That's a value. Excuse me. Well, it becomes more of a liability because you didn't pay it to as dividends. So that figure's going to go there,
Okay.
right? All right.
Is it still liability even after the, depending on how the shareholder bought in, would it still be considered liability if they did preferred and we did pay out the dividends and then that's what we had left after taking care
Right.
of everybody?
Right. That's a good point. And yeah, no, it wouldn't be a liability at that point because then it wouldn't be a retained earning because you paid it out.
Okay.
Does that make sense?
Yeah.
Okay. And then remember, everything that you're putting on this side as a liability is also going to go on the other side.
Mm-hmm.
A debit on one side, but it's going to be a credit on the other side because of the flip side of how it applies to the company. It's got a flip
Mm-hmm.
side to it. So it's going to go on the debit side, but then it'll also be on the asset side as well. And you'll see how it plays out when we enter everything, and then you'll see how it comes up on the financial statement. That's going to help you crystallize that. Make sense so far?
Yes.
And so any capital contribution that you've paid becomes a liability to the company because at some point it's going to be liable for paying that back to you, even
Mm-hmm.
if and when somebody purchases the company. When they get ready to purchase the company, they're going to pay off all the company's liabilities. Well, if you personally invested into the corporation, that makes it a liability to the corporation because the corporation now owes you that amount. Does that make sense?
Mm-hmm.
That's why your capital contribution is a liability to the company because you personally took your personal funds and
Right.
spent it to benefit the company's inventory or assets.
Right. Right.
Okay. Make sense?
Yes.
Okay. All right. Any other question? Oh, it's 12. It's 1 o'clock. I wanted to make sure I got through with you at 1 o'clock because you got to go. But any other questions quickly before I didn't mean to take up all the time.
Yes.
Did not mean to take up all your time.
No, 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 no. That's perfect. Yes, I did have one, and it was on the exam.
Mhm.
And
Oh yeah, one of them questions I felt like you answered incorrectly, but go ahead. I couldn't
which
say
one was
it
that
in
you
public.
felt?
I can't remember, but I remember saying, that's not right.
It's probably the one I had a question about. Because I was like,
I should have
man.
wrote it down. I was listening to it in as I was moving. So I
Mm-hmm.
couldn't write it down, but I remember thinking, that's not right. But definitely wasn't gonna say it in the community. Not gonna say it in the community. But I
Okay.
wanted to make a note of it. So which one did you have a question about?
So one of the ones I had a question about was like I just need a better understanding. Duration laddering. When I
Okay.
went back in the book to try to find to get a better understanding with that,
It's in the recording that I gave you.
Right. And so, and I went through all wait, the last recording?
Yeah.
I went through that was just the questions.
No, 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 not that one. The one that the recording where I talked about. Uh, so go all the way back to. I know what you're talking. I see what you're saying. Go to the recording where I talk about chapter 12 in the book. And I'm telling you that I have the expandable information that's going to be in the new
Yeah, yeah, yeah,
edition.
yeah.
And
Uh-huh.
I talk about how you can do the bond leveraging, and then I break out how you can do it. And then I talk about the laddering of how you can do them at different intervals because they're going to mature at different times. So,
Intervals, right.
uh-huh,
That's right.
uh-huh, they're going to mature at different times. So, and each time they mature, you take that money from that maturing bond, and then you would invest it in the next type of bond. Let's say
Mm-hmm.
we're working with a municipal bond, a corporate bond, treasury bond. Let's say we're working with those three. Well, the treasury bond is the one that takes the longest, forever and 1,200 days. I wouldn't
Mm-hmm.
even ladder with that one unless that's just money I'm just gonna put in to be in there, which is what
Mm-hmm.
my husband and I did when we began years ago. We got a lump sum of money, but we put that in and that just stayed there. We put it into his I can't even think of wow, that is nuts. I can't even think of the name of the fund now, but we put it in that fund. I'm still trying to bring it up in my mind. We put it in that fund and we just let it stay there. It stayed there from the time that we opened and we had no children all the way to like 2007 when we were in Thomasville, Alabama. And then 2008 when we moved up here. It just stayed in that particular fund
Mm-hmm.
because it took forever to mature. Okay,
Mm-hmm.
so if you're going to do something like this, the shortest term sometimes would be the corporate bond. So you start with the corporate bond. See where I'm headed?
Mm-hmm.
You buy a corporate bond, maybe it matures in 2 years. I'm just giving you a scenario. Then from that, you're doing a ladder,
Mm-hmm.
right? So then from there, you would take those funds once it matures. You're going to take all of it, the funds, everything that you put in there. Now you're going to take that and put it into a municipal bond. Let's say you get a state municipal bond, right? They're going to give you some tax abatements because you purchased a state bond for maybe revenue that they were building to fix a highway. I'm just giving you an example.
Mm-hmm.
And that particular bond matures in 3 years or 4 years. At the maturing of that bond, you take all of the money that you use to invest plus the surplus plus the revenue that you gain. Now you're gonna put that in the treasury bond. You're laddering. It's a ladder. You
Okay.
put it
Yeah. Mm-hmm.
in the treasury bond. Now the treasury bond is 1,700 years. No, I'm just kidding. It's a long time. That's just going to be there in the treasury bond. But when it matures, now you've got that amount as well. So over the years, you've earned that amount of money by laddering your bond investment. Does that make more sense now?
Yes,
Okay.
it does.
Okay.
It does. Um, it might have been the EAP. I know we talked about what
Employee assistance
I
program.
know what the employee assistance program was, but I think when I went back to watch the videos, I know we talked about the amounts being up to the business discretion as to how you want to allocate that
Right.
for.
I
But
suggested
that
2%,
one,
but
that I struggled with that one a little bit because I was like, well, I remember when we went back, even when I went back and watched the videos to make sure, I know we talked about we should do it, and this is why we should do it, and the amounts that we should do it was up to the business discretion, but you should do it because here's
mm-hmm,
why. I just
mm-hmm.
struggled with that one. Or
Was
if I
that
got that
it?
one right.
Whichever one it was, I was like, that is just not correct. I gotta I'm gonna go back and listen to it again. It's only 10
Okay.
minutes. I'm gonna
No
go back, and
worries
then I'm
about
gonna
it.
notate what it is, and
Okay.
I will probably text you so that you'll have it in mind
Okay.
to, to go over the next time we have a session. I may not remember to go over it the next time unless I write it on your file,
Mm-hmm.
but I'm gonna text it to you so you can remember to make sure that we go
I
over.
will. Mm-hmm.
Um, so keep an eye out in the community but your delivery was so good because you followed the directive because the directive is dress in business attire and you did that. You
Hmm.
just the way that you would be speaking to um standard investors. Now I know we got some investors that would rather you be in jeans and flip-flops. I get it. They all have their own idiosyncrasies, and you find out what they are from the brokerage that's going to sponsor you before those
Hmm.
vetted investors. Yeah, but
Hmm.
for the most part, a lot of those investors would like to see you the way you're dressed. A lot of bankers would like to see you the way that you were dressed in the video. That's why I said use business attire, because I can't say what percentage would whether you be casual or what percentage would whether you be in business attire, but I do know that there is a place in business for business attire. And that's why I
Hmm.
asked for you to come and present in that way. Since you
Hmm.
don't know what the setting is going to be, that particular attire is always in order.
Hmm.
So that you look good, you sounded good. I was like, look at her. Look at her. Go ahead on Enchanting Designs. Y'all bad. I know. I know it. So, but the next one's coming up. So,
Okay.
do you understand why you're doing them, right?
Yes.
Okay.
Yeah.
Okay. All
Oh
right.
yeah. Mhm. And I appreciate it because it wasn't just chapter, those questions weren't just from chapter 12.
I tried to do
Mhm.
I
Yeah.
tried to cover a lot of the
Mhm.
areas because we're going into the second edition whenever it comes out. Cicely just added something, y'all. So yeah. But what you added won't take long. It won't take long for me to implement that. But that certainly made sense. I that just escaped me. That's why it's good to have people that you're talking with, you're bouncing things off of, because I would never thought of that because I'm seeing it from one perspective. I got to see it from several vantage points. So thank you so much for that. That's all the credit you're gonna get though. Now I'm playing. I'm
It's fine,
teasing.
Rob.
I'm
Fine.
kidding. Thank you so much. I've enjoyed. Did you get everything you needed before we?
One more question.
Yeah, yeah.
So I want to send that marketing email out, but I asked you, you said you had some suggestions or things I need to change or reconsider.
Yeah, I need
When
to get that to you. Can I
can you
get it
send
to
that
you in
out?
the form of a video? Because I can do it real quick that way.
Absolutely. I just wanted to make sure I wanted to get that feedback out because I wanted to put that out, make those adjustments and changes, and then put that out as soon as possible.
Matter of fact, because I know you gotta go. That's what's messing me up. I can't think.
Okay.
I will not be the holdup.
No, you're fine, Mom.
I'm gonna go here really quick. If you just give me a moment, I'm gonna open it up
Hmm.
so that you can, because we've already missed January. So I know you want to go ahead and get these marketing um, things out. So let's do this now. Give me just a moment. I'm pulling up the email. Mhm. It's kind of coming. My polar computer is like, why? Why do you keep
You're not the only
stuffing us?
one. I'm praying for a new one
I
and
know.
some.
We just keep stuffing it with all of this stuff. Okay, here we go. Enchanting Designs. Hmm. It takes a minute to load. Just gotta be patient with her. All right, give me just a second. I just pulled it up and I'm just waiting on it to open. All right. Listen, I thought that see if I can share it so we can. I'm gonna close that out for now and I'm gonna open up this letter. That um that image is just I just love that. It was
That was
beautiful
research
when
and
we
it
were.
said show like three images that so I was trying to give a range of our work. Like some
Mm-hmm. Mm-hmm. Yeah, but this is just This is good, even though you don't. Um, yeah, it's good. That's nice the way you gave that variation.
Hmm.
Very nice, very nice. Um, so wait, I thought the something's missing. Mm, okay, that's not how it is. Right now it's got the image in the middle, but anyway, or is it? Maybe it is.
It is in the middle.
Okay.
Put it
I
at
hope
the
this
end.
message. No, 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 no. This is good. This I love this.
Okay.
We specialize in creating thoughtfully designed, vision, stunning events that leave lasting. That's the truth from corporate gathering. I thought that's an excellent hook. Mm-hmm. Mm-hmm. The opportunity to introduce our services, machine learning groups. Mm-hmm. 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 Taylor. Mm-hmm. That's nice. Yeah, thank you. So the only thing I was going to say, I know it's going to seem out of place to you, but people read stuff at a moment's glance and they never really comprehend everything that's being stated, right?
Right. Right.
So I was going to say, now it may seem out of order to you, but just give it a try, see what happens. Take this line here. Please feel free to reply to this email or visit our social media platforms to view examples of our recent work. Just take that line right there where you have, we hope this message finds you well, put it right there.
Okay.
Hmm. So right after you say, we hope this message finds you well, put it right there. Right after that statement. Now you're going to go into explaining who you are and what you do. But that statement is going to make them say, well, why would I want to reply to this email or visit your social? What is it that you do? See what I mean? Mm-hmm. And then when they finish looking at these beautiful pictures, something's going to happen on the inside of them. They're going to be like, let me reach out to them. I need to know, right? But if you wait until you get all the way down there, they're going to miss it. They're not even going to
Right.
see that. They're not going to
Right.
get to see that. You got to catch them up top.
Okay.
If salutations weren't important, or if salutations didn't, I mean, you need them just to help people understand that you're not barbaric. Because otherwise, I would say remove. We hope this message finds you well, but you do want to
I
leave
was,
that there.
yeah, I was struggling with that.
You want to
I was
leave
even
it there.
struggling with dear future client. Like I was that part right there. I didn't know if that was the place for it.
No, that's
I,
good.
okay.
That's good. Yeah, because you that's subliminal. You're talking to them. They don't even realize they're being talked to. That's good. Hmm. But put it right after that, and they may even feel like it's premature, but it's going to make them question why. Now let me see. Well, what is this? What is your product? What is? Because otherwise they'll look at it and say, "Oh, that's so pretty," and then they'll go right on, not really taking the time to read it. People who know you, yeah, but we're trying to get people you don't know that don't know you in that way.
Right. This is these are cold leads.
Mm-hmm. Mm-hmm.
These aren't warm. These will be cold.
Yeah. This is just the presentation is just oh, excellent.
We worked hard on that one.
I love that logo. We need to get it that we just talked about. We want to
Yes,
get that
that's why I
branded.
said,
We want to get
and
that
I didn't think
copyrighted.
about that until when I went back to go work on that. I was like, man, we did trademark this because I remember you walked me through.
Mm-hmm.
You got that done for me.
Yeah.
Um,
We can do it again. I mean, that's what I
yeah,
that that's a part of my job.
excited.
So We can walk through it whenever you're ready. I wouldn't want to do it in the middle of us doing the financial statements, but if you feel the need for us to do it right away, we can do it.
Oh,
We
no,
can,
no,
we
no,
can,
no. We're good. I'm working in a program because I remember we talked about me also copywriting the designs we do. So I'm trying to find a program. I did the program where I do the one little balloon. That was really hard. It took a lot of time. So I got to find a program that helps me streamline that a little bit. So
okay.
I did. I made a mock-up because I want to change our pricing list to look to go coincide with our colors and our brand and stuff. And so in
Hmm.
order to do that, I need to find, and then just when we send people after we go through the consultation, this is ideally what you're going to get. We can send them that, but these would be our designs that we put together for that.
Yes,
Uh, that's working on that and the website all at the same time. But
it's a
yeah,
lot. Building
yes,
it, man, I used to, yeah, it's worth it though. It's invigorating.
it
Yeah,
is.
yeah, it is. It fuels your excitement.
Mm-hmm.
Yeah. And that's why I like helping people build in this way. But this is an excellent presentation. I like because I get excited, I get kind of choked up because I know what it feels like. You know what I mean?
Mm-hmm.
And I just want to help people. So many people have that feeling that they can use to underwrite or to fuel their growth, you know,
Mm-hmm. Yeah.
their future projections.
Yeah.
Mhm.
Well, I'm excited.
All right, Enchanting
Mhm.
Designs.
Thank you.
You are so welcome. Reach out if you need me during the week. We don't have to wait until, class. Just let me know.
Absolutely. Absolutely.
All right, have a good one.
Thank you too.